Good morning, ladies and gentlemen, and welcome to the ENTEQ Technologies PLC interim results for the half year ended 30th of September 2021 investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted anytime using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives. However, the company will review all questions submitted today and will publish those where it's appropriate to do so. These will be available via your Investor Meet company dashboard. You'll be receiving an email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll, and if you are a shareholder of ENTEQ Technologies, if you could confirm yes or no, that would be most grateful. And I'd now like to hand over, if I may, to David Still, CFO, and Andrew Law, CEO from ENTEQ. Good morning to you both.
Good morning. Good morning. Okay, so for anybody who is new to ENTEQ, I'll give you a brief overview of where we operate. And essentially what ENTEQ provides are various technologies for drilling of oil, gas and geothermal wells. So within that drilling sphere, we break it down into three main technology groups. So we've got steering and control, measurement and communications. So steering and control really is you may have seen our product Sabre, which is a rotary steerable tool. So that's designed, and what that does is that steers the well whilst you're drilling, so that you can stay on the well path and adjust your course. The measurement is taking measurements while you're drilling to determine where you are within the ground, and then communications is data up, sending that measurement data up, and then also instructing the equipment down hole, so sending that from surface down. So how ENTEQ is structured is we have two main segments. We have the MWD, measurement while drilling systems, and then we have the Sabre rotary steerable. So the MWD is downhole sensors for working in hostile environment. It is directional sensors, measurement sensors, and the approximate market for that is 100 million plus per annum for the equipment supply. In Sabre, which is the rotary steerable tool, that's a new product in an existing market. Rotary steerable is a well-formed, existing market, and that market is at approximately 2 billion per annum. And the point there about Sabre is it is a truly game-changing potential for rotary steerable systems, and we'll come on to that in a second. So in terms of how ENTEQ and how we operate, we're a UK-US company. We're obviously UK listed. Our core measurement while drilling platform is founded on the XXT system, and that was one of our acquisitions, one of our earlier acquisitions. And that's a very well industry-renowned system for MWD. Then the Sabre is being developed out of the UK. So we have an engineering team and development team working on that in the UK. And then coupled to augment both of those product lines, we have distribution agreements with some leading providers around the world, mainly US, Canada, to enhance our product range, and we work closely with them. In terms of manufacturing, we manufacture in-house electronics, and specifically for high temperature, so very specialized manufacturing. And we have an operations facility in Houston. And then the Sabre technology is developed in the Cheltenham area, which is coincidentally where the hub or world hub of rotary steerable knowledge resides. And we're in the process of establishing a facility, which would be an assembly and technology facility in the Cheltenham area. In terms of sales and getting the product to market, we have a sales team based out of the US, plus sales representatives who we work with in the key areas. And then also we have those key technology partnerships where we work closely with those partners for promoting and putting full equipment packages together. So in terms of Sabre, this is a technology. It's a new system of doing rotary steerables. It was developed by Shell. It was actually discovered almost by accident when, so similar to penicillin, it was discovered by accident whilst Shell were doing some different tests, and by the nature of the tests, they had some of the bit nozzles, the drill bit nozzles plugged, and what that meant was that they started getting into a system where the tool was actually getting stuck in these concrete blocks that they were drilling into. And Shell did a great job of thoroughly investigating that, and then the system and this concept was born. So the way the Sabre system works is rather than use pads and pistons, which most rotary steerables, all rotary steerables use, what the Sabre system uses is a differential pressure. So by diverting the flow in the diagram on the right, by diverting the flow in this case up, so high velocity flow where you've got the red, and then lower velocity flow where you've got the blue, what we do is we actually create a force. So very similar to an aircraft wing, we create a force, and what we call a side force, that can then steer the drilling apparatus. And we can direct that force left, right, up or down as required. So Shell developed it, and Shell took it from a proof of concept, and they trialed it downhole in some field locations. And then ENTEQ obtained the license approximately 1.5 to 2 years ago. What we've done since then is a thorough re-engineering project where we completely re-engineered the system. And what we've done is validated all of the testing and theory that Shell did as well. We've validated that and essentially confirmed that has that everything stands true. So since then, we've taken the re-engineered system, so ENTEQ's re-engineered system. We've run it down whole in a field testing location, and that's been run in what we call passive mode. So it hasn't been run with the bit on the bottom yet. It's been run to demonstrate that the control system will work. Separate to that, what we have done is we've done testing using a flow loop at a testing laboratory or testing facility, and we've confirmed that side force, the red and the blue you see there, that side force exists and is strong enough to steer. So we've been doing that in an undisclosed testing location, and then what we're positioning ourselves is to then offer some of the additional equipment to perform field trials in the US, so in the North American market. So in terms of commercialization, the beauty of this system is that it is a fairly simple to manufacture system, and we can scale up the rental fleet as required, and we would expect commercial returns as we go through the field testing and then into commercialization during 2022. So in terms of what we've invested to date, you can see that 2.3 million value there. Okay. So in terms of what's special about Sabre, what does that mean to the market? The good thing is that the market has been developed and established for rotary steerable tools. It is in the order of 1.8 billion global market, and that market is mainly owned by two major service companies, which is Schlumberger and Baker Hughes, with others as well, but they're the ones who have the dominant market share. So what Sabre does is, because we don't use pads and pistons, because we use a different steering concept, that can, and it's designed, will result in a much lower total operating cost. And because we're not using pads and pistons, it has potential to have much improved reliability. And I mentioned the Schlumberger and the Baker here. What ENTEQ is a truly independent system. So what that means is we can then provide this system to independent drilling service companies and regional drilling services companies. So in places like Russia, in the Middle East, you get a lot of local content, local capability building countries. So the Sabre can be used to support and support those businesses who are driving to have a local regional service company. The business model that we will have is what we call supported rental. So it's a rental with ongoing revenue stream of maintenance, spares and technical support. We could have a sale if we needed to, but the main business is supported rental. Okay, in terms of our main business, we've been seeing, obviously in North America, the rig count has been steadily increasing, and then what the service companies have been doing in North America is they've used up the slack equipment, and then they started buying equipment in the last 6+ months. So we're seeing that flow through. Internationally, China has been slow. Obviously, COVID impacted, and then what we're seeing is discrete growth in particular regions for international. We've been phasing our investment of the Sabre technology, and that still remains. We're moving through those phases, and we've had a refreshed focus on cash management and reducing our overheads, which we've done. Okay, so a little bit more on the North American market, and this really, the graph here really shows the rig count and the oil price going up in line, and that's been steadily progressing, albeit it hasn't reached pre-pandemic levels, but we're seeing that activity and we're seeing that slack picked up in the market. The important thing there for us long term is the rotary steerable. North America is a strong rotary steerable market. We are seeing some signs of supply chain constraints, and that's where there's a desire, certainly with the recent uptick in the oil price, there's a desire to increase activity, but any particular item in that supply chain can sort of dampen that growth. So in China, like I mentioned, it has been slower to respond due to COVID. We picked up a bit of the China activity kind of in the prior 6 months, prior to this 6 months. Longer term, we do see that as there is a strong demand to do significant gas drilling. So we see that China can be a strong market after this recovery. In the Middle East, again, typically as usual, the Middle East and the rest of the world typically do lag any pickup from the US. However, I think due to some COVID frictions, travel frictions, we've seen that it hasn't picked up as much as the US for sure. That said, there is the strong demand for the technologies that we see, and we've seen that in our ADIPEC. We've just attended ADIPEC, which is the Abu Dhabi oil exhibition, essentially the show of the oil and gas sector, and we'll come on to a bit of that later. In the rest of the world, we've got some sales in 2 new regions, and again, long-term focus on the Russia and Caspian region. Long-term, and we're all aware of post-COP and the energy transition, and what we see is particularly gas drilling is and will remain important and remain significant. And when we look at the gas production levels that are required to support that transition, so in addition to that, in addition and supporting the transition, we see that gas production levels are forecast to go to be above today's levels for the next few decades. So what does that mean for ENTEQ? Is we need to make sure that our products are focused on gas and efficient gas drilling, and that's what I'll hand over to David for the next one.
Thank you, Andrew. Well, as you can see from the revenues, we're slightly down on this time last year, and basically the slower China market has been compensated by the increase in rig and general drilling activity in North America. We then move down to the gross profits. You can see right at the bottom, the margins we have, it has come down fairly significantly from the 60% where we were this time last year to 37%. That's primarily due to product mix. We had a lot less rental income in this first half year, which is a very high margin revenue stream, and we had increase in mechanical components, which basically has a lower margin. And going forward, the days of 60% margin were predicated on a fairly significant rental fleet. But what we've seen, especially within the North American market, there is more cash, more liquidity, and our customers are actually wanting to have control and title to the product. So at the moment, the direction of travel, especially in North America, is a straight purchase on terms rather than rental. So obviously that will impact on our margins. As Andrew already said, we continue to be labour focused on overheads, and you can see that we have reduced half year on half year. We expect the second half overheads to be slightly lower than the 1.4 that you see in front of us for September 2021. And again, we've managed to, as Andrew said, we've revisited the organisation chart and increased efficiency within the team, and therefore basically we've taken a couple of posts out. We think we're now at the kind of high or low water mark on overheads. We think we like to think of ourselves as lean and efficient as we can be. So we think that's where we are on the overheads. Underneath that, as you can see, the depreciation has reduced. Now, the depreciation effectively is the cost of sale of our rental fleet. The actual depreciation on the fixed assets we have at our Houston facility is very low. So basically, that's the P&L. If we move on to the cash, the key element there is that we have increased our rental fleet, but funnily enough, which kind of cuts across what I said a few minutes ago, but actually one of our major rental customers post the end of September had converted all his rental fleet to sale. So again, the H2 introduction of cash into the rental fleet, I think, will be significantly lower than the 1.1 you can see in front of you. The R&D, the $1 million, out of that 900,000 is the continued investment in Sabre. Again, we think we've reached effectively the kind of high watermark on the investment, half by half. So the 2.3 that Andrew has already referred to, which is our total investment in the Sabre product, that has given us sufficient number of prototypes to actually put into the additional field testing. So again, in H2, the cash spend on the Sabre project should be significantly lower than the figure that we've got in front of us. So that's resulted in the 5.3 we reported at the end of September. Now, in the announcement we put out last week, we did give an update. This major customer that has converted the rental fleet has paid us a significant amount of cash, and as we reported, the 5.3 went up to just over 6, and that's literally where we stand today. The balance sheet, as you can see, the big figure at the top is the intangible asset, which is basically the investment we put into Sabre, and as and when we will commercialise that, which hopefully be sometime next year, that figure will start being reduced as we amortise that spend over the commercial life of the product. The land and building, that is our 6-acre site in Houston. We have 28,000 square foot that covers this facility, which basically gives us plenty of expansion room if we, as and when we set up our North American repair and maintenance facility for Sabre, we won't need to spend very much cash rating facility because we have the workshop basically ready and waiting for us. Moving down the trade receivable 2.7, yes, during difficult times we did have to offer extended credit terms to the customers, but as I just said, a big customer has paid a significant amount of that debt off, and the bad debt exposure is basically zero. And after that, the rest is basically the cash and the small amount of trade payables. So we then move on to the team. Those of you who have been with us for a while, you're aware of the board and the change that we made at the 1st of April, where Martin Perry, who was one of the founder directors, has stepped back and is now our non-exec chairman. And obviously Andrew has taken over as CEO. The rest of the board, the board is as was. We've just gone from a 3 exec to non-exec to the other way around. On the right-hand side, you can see the 2 people who head up the different divisions. So Suki Gill joined us in May this year, and she is dedicated to the MWD division. She literally she has total control over that, and Neil has a similar responsibility for the Sabre division. I'll hand back to Andrew.
Okay, so in summary, we see in the markets we operate, and internationally. So the Chinas, the Russias, the Middle East, and the US, we see, and in line with the energy transition, we see that as a strong market, particularly for gas. Our focus is on delivering those technologies that can help deliver that efficient drilling, and in particular to support those national and regional service companies. Sabre being one of those technologies, and that's where our priority is making sure we have a healthy balance sheet to take that through commercialization and beyond. And we've recently rejuvenated the sales function, and that's bearing fruit and adding the distribution agreements. So that's one other thing we're doing, and certainly not in the short or medium term, but longer term we're open to any opportunities. The short medium term is focused on Sabre and getting that to market, because we believe that it has huge potential and is a strong product to operate in that market. Okay, I think that's everything, and we can go over questions.
That's perfect. Andrew, David, thank you so much for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab on the right-hand corner of your screen. But just while Andrew and David take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation's ended, we'll redirect you so you can provide the company with your thoughts and expectations. Andrew, David, obviously investors had the ability to pre-submit questions, and we received a number of those ahead of today's event. So before looking at the questions that have come in during today's event, I could start with these. The first question reads as follows: as I understand it, ENTEQ's target market for Sabre is independent directional drilling companies rather than majors, because majors have their own in-house technology. If the Sabre technology proves very successful, do you think majors will be interested in it?
Okay. So we've just come back from ADIPEC, which is essentially the trade show for the international, or the global actually, oil and gas industry. And we were quite overwhelmed actually by the level of interest that we saw. I mean, it was stunning in terms of the level of interest that we saw for Sabre. And that was partly we've been running, I think David mentioned, we've been running a strong PR campaign to make sure that everybody's aware of what we're doing. But there was, that had led to genuine interest. And interestingly, in your point there, the point of the question is, yes, the major service companies were most definitely interested in it. So we had let's say 3 out of the 4 major ones were present and active at the and came to visitors to see it. So yes, that is, actually it's a route to market. In particular countries, it might make more sense to work with those international, multinational service companies.
That's great. Thank you so much. Turning to the next question, could you highlight the main advantages of Sabre versus competition in terms of time, cost, usability, and effectiveness? How far ahead do we think we are, and what will that technology be difficult for competition to replicate?
Okay, so in terms of the advantages, it's a unique concept, and the beauty of the concept is that the simplicity. I mean, it has very few moving parts. It doesn't use pads and pistons, and when you introduce pads and pistons into a rotary steerable system, what you end up doing is you end up making it quite complex. So you add your complex system in a very demanding downhole environment, and secondly, you're actually carving out quite a lot of material out of the metal to put those pads and pistons in. So what that does is that weakens the body of the tool, whereas we with this system don't have that problem. We can generate. We have a very robust system. It is designed with reliability in mind, and that's the thing that really saves time is reliability. And it's designed to have significantly lower total operating costs. In terms of how easy it is to replicate, this is a Shell developed system, and we have a broad patent on that. And then not only covered by the patent, there's a significant amount of know-how that goes into developing this system. And we've completely re-engineered what Shell has done. We've taken their good work, but we've re-engineered it. And there's a significant amount of know-how into getting that system working and finely tuned so that it can work.
That's great. Thank you very much indeed. If I may turn to the next question, if Sabre will be on a rental basis plus training and operation, won't that limit its scalability? Wouldn't a distribution model allow it to scale quicker?
So our main route to market is for us to provide that the Sabre system to directional service companies, and then they provide it to the operating company, and they run that service. So we would provide that as a rental to those directional service companies, and then they deploy it in country. So and for them to scale up, so if we provide them 1 or 2 systems, and we can then easily scale up to 20 systems or more without having to do significant, without having to do 20 times the amount of training or anything like that. So it almost serves as a distribution type model, in that we work closely with directional service companies as our route to market. Then they can expand that out quite well. So yeah, that's. I mean, we could look at distribution models, but I think that's our main market. David, do you want to?
Yeah, and the other aspect is obviously you can only lose your reputation once. So we want to be very, very careful how we roll this out, in so much that it will be a supported rental. We will be there from day one with the new operators, because yes, rotary steerable technology is out there. It's been around for 20, 30 years. So the technology is not new, but the way we do it is very, very different and unique. And therefore, that's why we want to work alongside our customers in this supported rental model. And the other thing is repair and maintenance. That is absolutely key. So once it's run a certain number of hours downhole, it comes out, we strip down. Now, with a pad and piston system, that is quite an expensive and complicated system. Whereas our system, because of the mechanical simplicity, we strip it down, we look at the bearings, we look at a few other wear parts, but that's it. and this is coming back to Andrew's point on whole life costs. But also it introduces a new revenue stream to ENTEQ, whereas before we've tended to sell and then maybe a few follow-on spares. This will be a rental, ongoing rental, but ongoing repair and maintenance revenue stream as well, which is obviously the quality of earnings is going to be significantly different because we can see that going forward. The scalability on the financing, again, because it's a very simple and elegant engineering solution, it's significantly cheaper to produce. Therefore, from a scalability, how many rental fleet, how many kits can we put into the rental model? We have significant cash, we have sufficient cash, and we have sufficient cash to scale up because of the cost of production is actually significantly less than our competitors.
Thank you very much, guys. The next question has a few component parts to it, but I'll read it out in full and give it your best stab. To what extent will ENTEQ manufacture Sabre? Do we know what sort of lead time will be involved to produce 1, 10, 100 units? How many units would we like to have in our rental fleet, and what geographic locations would you like to keep them in?
Okay. So to what extent will ENTEQ manufacture? 100%. So we will manufacture, and we're not going to outsource that manufacturing to anywhere, and we're not going to license that manufacturing to anywhere. Do we know the lead time? What we have is the pre-production units at the moment, so the lead times for them is not necessarily the same as what we'd have for production. We know the lead time. It's manageable for sure, and as we scale up, I think we can bring that down. How many units in the rental fleet? As many as possible. I mean, like I say, it's a approximately 2 billion market. There is plenty of scope for it to have a meaningful rental fleet. What geographic locations would we keep them? So we would have our assembly and technology centre in the Cheltenham area in the UK. That's where we would produce them. We would do some overhaul there. We would have a place in the US. We already have a facility there. We would use that for the US. It's most likely that we would do something similar in the Middle East if that market we can get some traction there. Russia and China, those are the key markets where there's a significant amount of onshore drilling.
Yeah, but the rollout obviously will be the key, and we'll be very conservative because what we don't want to do is have initial failures in any particular market. So that is key. And coming back to support, we will roll out once we have the infrastructure in country to do the repair and maintenance. But because it is a simple tool, we're not talking major capex to set up new facilities, basically an industrial unit with a few workbenches. So we can roll out quickly. The challenge is rolling out sensibly to make sure that the support is there, and we do it in a very structured process.
That's great. Thank you very much indeed. Next question we received reads as follows. I understand that the field trials of the Sabre tool are currently ongoing after the successful initial system and initial field trial. Could you please elaborate on what kind of field tests are currently being performed, and can investors expect to be updated on these field trials as they progress?
Okay, so what we've been doing to date is what we call the passive test. So that's where we're running the tool downhole, but without the bit connected. So we're running it in what we call the drilling string, but we're not actually running it with the bit connected. We're using a conventional steering system at this point, and that's really, like David said, is what we have to do is make sure we have no or reduce any infant mortality failures, and that's why we're taking a very prudent approach to establishing the system works in a downhole environment prior to then putting the bit on the bottom and then steering with the system. So we're currently doing the passive testing, and then we will move on to the active testing thereafter. We've been very pleased actually with the results of the passive testing. And then we've also done the side force testing, which proved that the bit, the flowing through the bit in this unique way can generate the required side force. In terms of updating, we've been very transparent, and we continue to be transparent on when we reach the development field test milestones.
Yeah, and when it comes to field testing, each regional customer will want to see data from their region. So just because we've had very successful data from the current facility where we're testing, when we roll it out to North America, our North American customers will say, well, that was great for them. Show me the data in the Permian and the other major basins in North America. So again, as we roll out the field testing, we'll be rolling out field testing geographical area by geographical area, obviously based on where we see the greatest potential. And when it comes to keeping our investor base informed, you can see that we have tried to do that in the past, and absolutely, as soon as we get something that we feel that the investors need to know and the market needs to know, we will release the appropriate information down the appropriate channels. Absolutely.
That's great. Thank you very much indeed. A few more pre-submitted questions, if I may. Could you please elaborate on what kind of profitability margins, EBITDA, are expected from the sales of the Sabre tool?
Yeah, we've said on more than one occasion on this presentation that the cost of production, because of this elegance and simplicity, will be a lot lower. We won't be kind of underselling it, shall we say. So there's a kind of market rate, a market daily rate for a rotary steerable system. We don't want to lowball. We don't want to. We think that this technology is sufficiently disruptive because of the way it drills. We don't see that we need to lowball it into the market regarding rental rates. So the market rates in the various regions we think we can get. Very healthy, shall we say, especially on the rental margins. And as I said, on repair and maintenance, there is a very expensive kind of benchmark for a repair and maintenance run at the end of a piston and pad system. We will be able to undercut that because we just won't incur the costs. When it comes to what we charge our customers, because there's an expected rate, we'll be open and honest, but we won't be lowballing either the initial rental or the repair and maintenance revenue stream that we get.
Thank you so much. Are there any significant investments required to set up the Sabre manufacturing and assembly facility?
Basically, no, because our competitors, as Andrew said, because it's mechanically complex, it's quite difficult to kind of break it apart to replace. They need significant machinery to basically unscrew it and disassemble it. Because of our system, no. Basically, workbenches, we don't need any overhead heavy craneage, we don't need specialist equipment. So the answer is no, there will be obviously CapEx, but it's more of a machine shop without the heavy equipment sort of CapEx.
Yeah. And one of the benefits of that, it means that we can set up remote, almost containerized support centers for remote operating locations. So no, it's quite positive, and that's one of the benefits is we don't have to have that CapEx in large equipment to do the overhaul.
Yeah, so manufacturing assembly support,
That's great. Thank you very much indeed.
Doesn't require heavy CapEx.
Okay, we're just coming up to the final few pre-submitted questions, and I think you touched on this one already. Was there a lot of tangible interest in Sabre during the recent trade exhibition, and how did people react to the new and innovating steering system?
Yeah, I mean, it's phenomenal how much the level of interest, from it was continuous for the whole week. It was continued. David was there as well, I mean, one of the reactions were two main points on the reactions. I mean, it was, someone said it very nicely, is this is the first time in a long time that we've seen something truly new coming to market. And, you know, naturally that people are going to have some amount of skepticism, and it was quite funny in that some of the people who were skeptical, and that's understandable, revisited us and came back, you know, repeatedly. So no, it was very encouraging.
Yeah, and as well as potential customers, we had, you know, to be perfectly frank, you know, the show opened at 10 o'clock on a Monday morning, like 10:01. The head of the rotary steerable division of a major customer was competitor. Sorry, was there. So yeah, it wasn't just customers; it was competitors as well.
Thank you so much. Two final questions. I noticed that a small portion of the trade receivables are currently classified as greater than 1 year. Could you please provide some elaboration on the current status of the trade receivables in general? Are there risks for bad debtors identified?
Yeah, I think this has been covered, but yeah, the greater than 1 year element was that this particular customer who was then basically taken title, so all the debts has gone from that particular one. Bad debts, no, as I said, we don't have anything. We have some slower payers, but we're working with them, and bad debt's not an issue for us.
That's great, thank you. And the final pre-submitted question, the company's cash balance has slowly been depleting over time. Does the company have sufficient cash on the balance sheet to launch the Sabre tool, or are there any plans for an equity or debt raising?
The answer is yes, we do have sufficient cash. We're always open to other sources of finance. So, you know, whatever means that will be, obviously we will take it. We'll be obviously very cautious from incurring significant amounts of debt. But because of the beauty of the rental model, it's kind of like cash positive within a relatively few number of months. So once the rental model gets and the rental fleet gets out there, it will actually be funding the following tranches. But yeah, we continually model the cash requirements going forward as you'd expect, and yeah, we're making inquiries in the appropriate alternative sources of finance. Not that we see we need them at the moment, but being prudent, you'd expect me to be doing that anyway.
Well, that's great. So that completes the pre-submitted questions. So thank you firstly to the investors that have taken time not only to pre-submit questions, but you'll see you've received a number of questions through today's meeting. So perhaps now, if I could just hand back to you to read out the questions in the Q&A tab, and obviously where appropriate to give your responses, and then I'll pick up from you at the end.
Yeah. Okay. So the first question we see is, are you able to share an indicative timeline for Sabre between now and the announcement of the first commercial sales? I wouldn't want to commit to anything at this point. We have a field test agreement which is ongoing, which can move into commercial terms. So that's one option. And then, like I say, we're moving to positioning for field testing in the US early next year. So it being a development project, I don't want to commit right now to a fixed timeline, but all I can say is we've been encouraged by what we've seen so far, the US program, and then the plans to move into the US.
Yeah, and the information flow from us to our investor base will be appropriate. So we'll keep you updated.
Okay. And like I say, so the question is, if Sabre is relatively easy to manufacture, how strong do you believe your intellectual property protection is on it? Well, Shell had the original patent, so we believe it is strong. And like I say, there's additional know-how into making this work beyond the patent, but it just in terms of practically getting the system to work has required quite a lot of very clever re-engineering, actually.
Yeah, and as we've been re-engineering, we've applied for patents in ENTEQ's own name, so we'll have the Shell base, and we're building upon that. We have to be realistic. There are certain regions of the world where things get copied. And we have mentioned on more than one occasion how simple and elegant the engineering solution is. But yeah, so that the done metal can be re-engineered, and somebody could copy that relatively straightforwardly. But the clever bit is the control systems, the software, the firmware, the uplink, the downlink, and that is where the tool kind of will either succeed, which it will. So where people try to copy, it's the control system, it's the firmware, the software, etc. that they always fail on. And the other thing is this will be rated at 175 degrees, which is the top end, and that matches all our XXT rating. And the regions of the world that do copy struggle to get their copied products to work at high temperatures.
Yeah. Okay, next question is, pre-pandemic, I think you had around a 20% share of the US and rig market for MWD equipment. Your equipment is around 20% of the operating fleet. Is that still a reasonable estimate as drilling picks up again? Interesting one. I mean, it's we have, with the XXT system, we have quite a large installed base. What we're seeing now actually is that because of some supply chain constraints, is people are trying to kind of get some of the see what they can do to optimize their fleet. So we're seeing that right now. We're seeing if we can get people's established fleet kind of back up and running. So so that's where we are. I don't know if you've got
we have a major customer who seems to be very successful in getting new drilling contracts, and to be perfectly frank, they're continually coming back to us because the good directional drillers will get the work, and we seem to be backing the right horses from that point of view.
Mm-hmm. Okay, next question is, could you comment on the main risks you're concerned about in the next 6 to 12 months, both internal, such as technology delivery, and external, as in the oil market? Okay, internal, I mean, technology delivery, we are going through field trials. We're confident with the level of progress we've got and we've had to date. There is always technology risk, and that's something that we'll have to manage, and we're working through that. We have some some alternative backup plans as well, which if we need for how we could sort of redeploy some of the technology, that maybe a backup plan, it may be a parallel plan. In terms of the macro market, the oil market, it's not something we're worried about too much, in that if you look at the markets that we target, it's high volumes of drilling, and then also when you look at something like a Sabre, the rotary steerable market, the fact that we have a new disruptive technology that can enter that market, it can enter even in a down cycle on the oil and gas down cycle. So we're relatively comfortable with that.
Yeah, and on the technology side, we are a small company with a relatively small engineering team. But we've recently announced these 2 new distribution agreements, so we're constantly on the lookout to be offering the best technology-led product which obviously are compatible with our MWD string. And we're not too proud to work with the best of the rest, and that's what we're doing. The technology deal we announced basically is both of these companies were very, very strong in North America and Canada. They recognised that ENTEQ was very, very strong and had proven track record of delivering internationally. So we've got a very mutually beneficial distribution agreement, and we're in some of the regions they don't need the highly rated temperature of our XXT system. So if we can offer, to be perfectly frank, a cheaper, lower temperature alternative, which we can now do through these technology partnerships and distribution agreements, it just increases the market penetration of that.
Okay, next question is the geothermal drilling market a realistic contributor to future revenues? And is the Sabre tool applicable there? So yeah, I mean, the geothermal drilling market, yes, it is a realistic contributor to revenue and future revenues. I mean, when you look at the number of wells drilled, I mean, the geothermal wells the well count is much significantly, orders of magnitude smaller than the amount of gas wells. But it's still a market that we can operate in, and it's a high temperature market and it's a high vibration market. So, i.e., the drilling that you experience while you're drilling geothermal tends to be very high vibration, high shock, and that's where you need reliable, rugged equipment. And is Sabre applicable there? Yes. So I didn't cover this earlier. I'm glad this question's come up. Is one of the key advantages of Sabre actually is when you're drilling, you get a lot of vibration, and you can get what they call rotational or torsional vibration. And the unique nature of Sabre is that it is insensitive or decoupled from that torsional vibration, whereas most other, not all, but most other rotary steerable systems are susceptible to this torsional vibration. So that's where Sabre has one key advantage, and it would be key advantage in the geothermal market because of the vibration as well as being a high temperature tool.
Yeah, and the vibration is a major contributor to failure and lost time in drilling.
Yeah.
Andrew, David, thank you very much indeed. I might just come in there on the basis that you've answered all the pre-submitted questions and all the live questions. So thank you once again to everybody for submitting the questions and for you guys for your responses. I know investor feedback is important to you both, and I'll shortly redirect investors to give you what they think and give you their thoughts and expectations. But perhaps before doing so, I could just hand back just for a few closing comments to wrap up with.
No, thank you very much. We'll keep you posted. We'll keep you posted because we're as excited about this technology and the future, and therefore what we're doing is a very active campaign to make sure that our customers get to see that. And that goes alongside with keeping our investor base informed as well.
Oh yeah, yes, and the final note. We are cautiously optimistic regarding the future of not just the core MWD division, but Sabre, obviously, as well.
That's great. Andrew, David, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as I'll now automatically redirect you for the opportunity to provide your thoughts and expectations in order that the management team can really take a view as to what's next. So thank you very much indeed once again. On behalf of the management team of ENTEQ, I would like to thank you very much indeed for attending this morning's presentation. That now concludes today's session. So good morning to you all. Thank you.